Now, imagine you are a so-called retail investor, okay? You're a retail investor, and there's two types of investors. There's retail and institutional investors. Do you understand the difference between them, Zinters?
Not really.
Well, it's very simple, okay?
Does one and second does something different.
No, well, basically they both do the same thing, right? If we're talking about, let's say, trading, you can be a retail investor in trading and you can be institutional investor in trading. The only difference between those two are the access to the capital. So institutional investors are hedge funds, the banks, investment funds, pension funds, basically institutions that possess huge capital. And what they do, they go and they buy a lot of things in the market. They buy gold, they buy oil, they buy shares, they buy bonds and stuff like that. So they participate, they create, let's say, the movements in the market because they either buy or sell things. You understand?
Yeah. Oh, okay.
So institutional investors, like I said, are institutions with a lot of liquidity. So they are able to get into the contact with producers, let's say, buy oil, for example, okay, buy millions of barrels of oil. Now, you are a retail investor. So first of all, you don't have that access to capital. You don't have millions and billions of dollars. That's basically what you need to have if you want to participate in the capital market. You understand? So you don't have that, like I said, because you're a retail investor. And that's why no one will ever sell you anything in the capital market as to a retail investor, for example, oil. You cannot go and buy, let's say, 1,000 barrels of oil anywhere because, first of all, no one will sell that to you. And second of all, you don't have, let's say, a place to store that unless you have a huge backyard, right? Where you're going to store 1,000 barrels of oil. You understand?